Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are talking all things halving. It's finally upon us, the 4-year cycle has come, and halving is now this month. We're going to be walking through all the things companies have done to prepare, our outlook on this monumental event, and our forecast for the remainder of the year. Now, in addition to that, you guys, Bitcoin price has broken down overnight. We're well below $70,000 US now. A lot going on in the market this morning. Before we get into all that though, please take a second, hit the like button, you guys. It's 100% free to do. It's a huge help to myself, the channel. Anthony loves it. We'd really appreciate if you hit the like button. If you're not already subscribed, 43,000 subscribers. We just crossed that milestone. We'd love to have you as part of the community. And finally, leave a comment in the section below. Let us know your outlook on halving, the impact it's going to have on these miners, and your forecast for the remainder of 2024. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, action-packed for you. We set out to talk about all things halving related. Of course, this huge phenomenon's happening this month, a 4-year cycle coming to fruition in front of our eyes as we've seen the launch of the ETF really take the world by storm. So that's what we wanted to focus on in today's video. We've got Anthony Power, our resident Bitcoin mining analyst, here to help talk to us about what the halving is, how these companies have been preparing. But before we get into that, Anthony, I quickly wanted to touch on the Bitcoin price. It's really fallen off a cliff overnight. I mentioned in the intro, under $70,000 US. It's now broken through $65,000 US. I saw a meme on Instagram last night, Anthony, saying the halving must mean that the price of Bitcoin is cut in half. Is that what's happening here, Anthony?
The price of Bitcoin isn't getting cut in half at the date of the halving. And what we've noticed yesterday is the amount of outflows from the GBTC ETF funds. So there was more Bitcoin being sold yesterday in those funds than actually inflows into the fund. So that might be one of the reasons. It was a significant amount as well. So, we have these days. We know it happens. We've spoke many times. Bitcoin is volatile. It might test lower levels. As I say, we don't give predictions on the channel where it goes, but it's been holding over 60,000 for a quite significant amount of time now. And this doesn't normally happen when you're coming into a halving, that you're close to the all-time high. So we have achieved an all-time high before the halving. Once the halving occurs, obviously we'll talk about that in a second. But I think sentiment is still there. People are still interested in this space. They're buying Bitcoin, they're buying the ETFs, they're buying mining stocks. So, everything's fairly positive. There's no sort of really bad news out there. So we know that since the commencement of the ETFs, the GBTC one has just been literally offloading, many days. The fortunate thing is the other ETFs have been purchasing Bitcoin at a far greater pace, so that has kept the price up. And we'll get to see what happens as we go into halving, because once the halving occurs, there's a supply issue. Then there's even less amount of Bitcoin being mined on a daily basis.
Well, of course there is. Yeah, we're going from 900 globally to 450 per day. And I was reading more about the GBTC outflows, Anthony, because a lot of people are saying just change your fee structure or do something to stop the outflows. Why are they just letting so many millions and billions of dollars leave this fund? And a lot of people are thinking there was actually some jockeying going on, as this was the first ETF or trust that was out there. A lot of the hedge funds, institutions who anticipated the ETF approval coming may have been positioned into GBTC. Now they're moving their money out into their own funds, and there's just simply nothing that Grayscale can do to stop it. So that one will be interesting to develop. Hopefully the price of Bitcoin doesn't get cut in half this halving cycle, Anthony, because that would sure make us look silly, but we'll see what happens here. And for me personally, guys, this is a great buying opportunity. As the saying goes, you don't get mad if the price of gas goes down after the day you fill up your tank. I've got a fairly full tank of gas, but I'm always happy to add to the miners on any weakness like this. And if you combine this with yesterday's action, a lot of these miners are down 20, 25, 30% from just a week ago, presenting a great buying opportunity. In my personal opinion, not financial advice. going into the halving. So speaking of the halving now, Anthony, we've done a good job of talking about how companies have prepared for this, all the different things they've done from balance sheet to machine efficiency, fleet health. Why don't we start off with what the halving actually is, and maybe talk to us about why this phenomenon exists in the Bitcoin and why this phenomenon exists in the blockchain or Bitcoin technology stack.
Yeah, I mean, the halving itself is effectively like it's a pivotal moment in the evolution of Bitcoin. And we look at the amount of rewards that are issued, and every block is issued every 10 minutes or approximately every 10 minutes. And when we've issued 210,000 blocks, then we're going through to a halving. So it's approximately every 4 years. And if we go back to when this started in 2009, Bitcoin mining was done effectively by individuals. There was no big mining companies at that point in time. We've already articulated on many podcasts the oldest miners in the space out there, publicly traded miners, are the likes of Hive Digital, Bitfarms, and Hut 8, the Canadian miners, who've been around for about 6 years. So you go back 6 years ago to 2018, mining had already been in place for about 9 years at that point in time. And when these individual miners were doing it on smaller machines, the rewards per block at that point in time was 50. And so as we explained, the successive halvings of 2012, 2016, 2020, that amount of rewards was halved each time. So at the moment today, every miner who achieves a block is rewarded with 6.25 Bitcoins and an element of transaction fees that are associated with that block. When we get to the halving date, which is due to occur around about the 19th of April, people have now got it tied down to that there, unless there's some significant change with regards to difficulty, and it might be, a day of either side of that. But the 19th of April, the rewards will be cut to 3.125 Bitcoins per block. So only 50% of the rewards that are being received now. And in theory, the costs for mining those rewards won't change. So, if you're getting less revenues for what you're doing, you have to make sure that the costs associated with driving those revenues are looked at and considered and are the best appropriate and available for your company. And that's what we'll talk about now.
What's so interesting to me, Anthony, is if you think about any other asset or asset class or a technology in the world, none of them are set up to be deflationary by nature like Bitcoin is. And that's really the phenomenon that happens in this halving event. It becomes increasingly or exponentially more difficult to obtain new Bitcoin. That's where this whole stock to flow discussion comes from. And the fact that you simply can't make more Bitcoin, and you've got all that buying pressure on the supply side that's existing in the marketplace. Not to mention, Anthony, we've talked a lot on the channel. A ton of people who hold Bitcoin, probably most of the people watching this video, have no intention of selling it. A lot of the Bitcoin that's already on exchanges has been taken off, put into cold storage. And on top of that, there's a number of Bitcoin, I've heard upwards of 3 million, where the keys have been lost, people have died, there's no way to access these computers. We've all heard the story about the guy looking through the landfill for his fortune there, the poor guy. So again, 21 million total supply. I would say substantially less of that is actually available for purchase or trade.
And if you consider, 21 million is the absolute maximum amount of Bitcoin that will be produced when Bitcoin mining finishes, we've already mined 19.65 million, and that's about 93.6% of the whole supply already in circulation. So you've only got 6.4% to mine, but that's going to take another 116 years to achieve that. And that's the whole impact of the fact that when Satoshi set this up, he looked at the halving. So every 4 years, these rewards are halving, and it keeps going down. And there'll be fractional amounts of Bitcoin being mined in the latter, years of the remaining time frame.
Certainly. And that really boggles my mind too, Anthony, when you start thinking out into the 2080, 2090, 2100 years, can you think how much global hash rate is going to be dedicated on a daily basis to mining fractional Bitcoin, you guys? You're able to purchase Bitcoin now. You could buy 1/10 of a Bitcoin. Eventually, that's going to take the entire world's computing power to mine that fraction of a Bitcoin is just mind-blowing. Satoshi, quite a guy, Anthony. Do you sit around on weekends and come up with ideas like this often?
Not very often, no. And if I did, we wouldn't be doing this podcast.
You don't like to reinvent global currency and trade, Anthony? That's not something you do on the weekend often?
Not really. I try to keep the weekends for family stuff.
Good. Okay, family first. So now we understand what the halving is, why it's important to blockchain, to Bitcoin technology, the deflationary component of this currency. So Anthony, the next question is, what have these companies been doing to prepare?
They've been doing a lot, and if you think about the mining companies themselves now, and there are over 30 publicly traded mining companies in North America, the information that they provide readily and regularly, lets us know exactly what's happening with regards to how they're preparing. So, I come up with an article 18 months ago on this particular topic, and it's just interesting to see how many of the mining companies are now following that route there. So, the first thing you've got to look at is we talked about the cost of mining a Bitcoin. What are the significant costs? And the biggest cost a mining company will face is the energy cost. The energy cost to mine a Bitcoin is quite significant. We're seeing some of the early updates for March coming out now from some of the Bitcoin miners, and they're putting their energy costs on their updates. So we've just seen an update today from TeraWulf. Their energy cost to mine one Bitcoin, and they're one of the lowest providers of energy, is around about 13 to 14,000 per coin. That's at the point now when the rewards are 6.25 Bitcoin. Effectively, post the halving, that energy cost effectively doubles to mine the same Bitcoin. So you're looking at a number closer to 27,000 just in energy costs. So the miners themselves, they'll be looking at where to go and find the cheapest energy and optimize those rates. And we've seen mining companies not just stay in the USA or Canada, they've gone to further afield to find cheaper energy. We've seen the likes of Hive Digital and Digital go to Iceland, to go to Sweden. We've seen Bitfarms go to Paraguay, to Argentina to tap into cheaper energy. We've seen Marathon Digital go to the Middle East of all places, and we've discussed that there. So miners have been prepared to travel. Africa looks like the next continent which is starting to gain a significant amount of companies going there and tapping into that cheap energy. And I've seen prices for hosted miners there, so where you can just install your miners in a facility there and let it run and pay a hosting fee, and those charges there are coming out similar to what self-mining companies in the US and Canada are paying for just the actual rate of energy. So there are areas of stranded energy around the world, and that will continue to happen for the next 116 years of the mining cycle, because I firmly believe that the energy price can't keep rising to mine Bitcoin. Miners are going to have to get more, identify these stranded areas, pay lower amounts, because otherwise it's not going to be a lot of them are not going to be able to survive doing this process. And we'll see energies come down, and eventually it might be that energy prices are really getting down to zero to make it worthwhile for mining companies to be out there. And if you think about that in context, how can it be zero? Well, you can go to areas where there is a significant amount of maybe renewable energy in the form of wind, in the form of solar, in the form of hydropower, and that energy is significantly more than required for the domestic and industrial supply of the area. And therefore, these energy companies just can't keep holding energy that's not being utilized. It needs to be utilized, and mining companies can go in there and balance the load in these, the energy load in these locations to make things work correctly, able to switch on and off when the energy supply increases for the domestic and industrial requirements, but make real use of the energy that's stranded, and therefore be able to negotiate a cheaper price for that energy. And we'll start seeing a lot more of that there. But energy is the number one cost that is looked at and has been looked at, and we've seen the prices for some of these miners coming down now. We've seen miners getting into the low 2 cents a kilowatt hour, and we've even seen miners who were hosted before looking to now go into buy their own infrastructure and realize the savings where they don't have to pay a hosting fee.
Gotcha. So low cost power, obviously the number one focal point. Now there are other costs. We'll probably get into that, equipment costs as well. But primarily, you guys, the variable cost input here is electricity or the cost of power. And that's really what a lot of these companies have been focused on. So Anthony, following that, I would say probably secondly most important would be fleet efficiency. This one's directly correlated, obviously, to energy consumption and the amount of energy required. We've seen a lot of developments in the space of hardware over the last couple of weeks. Obviously, Bitdeer came out with their Seal Miner A1. Now we're starting to see some new generation machines from the big three producers here. The lowest I've seen so far, Anthony, 15 joules per terahash, which is going to be very interesting. We've seen a lot of these companies really jockeying for position, purchase orders, option agreements for the T21, the S21. We've heard Ben talk about how he was so pleasantly surprised with the T21's performance. But this is very similar to flat screen TVs back in the days of high school, right? Every month there's a new innovation, a flatter TV, a thinner, a bigger. Same thing we're seeing with the chips that are going into these Bitcoin mining rigs, Anthony. So fleet efficiency, talk to us about that.
Yeah, fleet efficiency is really important. And if you consider that the average fleet efficiency in North America now is probably around about 35 joules per terahash, and you look at some of the latest mining machines, and you've articulated the Bitmain T21, S21 machines, and their newest machine that they brought out is the S21 Pro, which will come out later this year for mass production. That's got a 15 joules per terahash efficiency rating. And what does that mean? That means effectively that machine will be able to mine Bitcoin less than twice the cost that the average efficiency of the miners take. So if we look at that average of 35 and you've got a machine that operates at 15, you're significantly under 50% of the cost to mine a Bitcoin. And that's what it's all about. It's getting the most efficient miners out there. Now, we know the top three producers of mining rigs at the moment are Bitmain, MicroBT and Canaan, but we've also seen a number of other entrants. And you've highlighted the fact that Bitdeer have released their first generation model, which was able to achieve 18.1 joules per terahash. That's their first model that they brought out. I'd love to know what the second model is going to be like. And they're going to produce it for themselves initially, and then look at, obviously, depending on the returns, they'll even look at producing that model for competitors to buy as well. We've seen the likes of Marathon announce a machine that they're bringing out that's been produced for them, again with low efficiency and low efficiency mean a low efficiency number, but very highly efficient mining machines. And so there are competing companies coming out. Auradine, which are again associated with Marathon Digital, they'll be announcing what their machines are going to be, as well shortly. And we know that Block are also producing, the latest machine from their side. So you might have 6 or 7 competing providers of these machines, which, from my perspective, is great for the community, because if you've only got a few providers, then the price can be increase significantly without any reason. But when you've got 6, 7 different providers, as long as they're not all working in a sort of like cartel fashion, then that offers competition for all the miners to look at. And then we start looking at the mining companies that have already been making some investments in the current mining machines produced by Bitmain and MicroBT. And we've seen the likes of Bitfarms go out there and announce significant orders to get themselves to 21 exahash by the end of the year. We've seen Bit Digital also announce orders on a smaller side, and that will double their hash rate by the end of the year. Core Scientific, coming out of chapter 11, have also announced their purchases. And actually, Core Scientific have 5% of their company currently owned by Bitmain. So I'm assuming there's a really good partnership there to make sure that works out for both parties. Hive Digital, again, looking to increase their hash rate to 8 exahash by the end of the year. So they've been buying machines and replacing some of their older machines. So they're looking at sort of like really bringing down the average efficiency. IREN, well, we had an update yesterday. They've got their all their S21s and T21 models all paid for to get them to 20 exahash by the end of the year. Marathon Digital have also made announcements and to get to 35 exahash per year, and TeraWulf too have been receiving machines and putting them into their facilities and replacing some of the older models, and they're at 8 exahash today, with a plan to get to 10 exahash by the middle of the year. But if you look at one of the biggest investments we saw in recent months was actually by Riot Platforms, and they announced a large number of the latest generation miners from MicroBT this time, and they're expected to receive about 31,500 of their M60S units over the next 6 months at the Rockdale facility. So this is their current facility in Texas, and part of that order is to replace some of the older machines. So 17,000 of those 31,500 units will be to replace older units that are in the machines. And we remember we had Jason on the podcast about a month ago explaining some of the reasons why performance hadn't been as high as investors had been wanting to see. And now they're addressing that by this significant order. The rest of the units will be added to their capacity to take them through to 15.2 exahash by Q3 at their Rockdale facility. They've also since then ordered an extra 66,560 units, valued just under 300 million, with an efficiency rating of 18.5 joules per terahash, and they're going to be delivered directly to the new facility at Corsicana, where they'll all be installed into their immersion cooling technology facility there. So really big order. And then we've got the likes of a smaller miner like DMG. They're as we speak on this podcast now, they're having 4,550 units shipped of the T21 miners, and you articulated, Ben, had already addressed the T21 as being really, really good under their testing environment, where they were getting 25 to 30% higher than was actually written in the specifications. So DMG, getting those miners in by the end of June, which will effectively double their hash rate to about 2 exahash. And one thing to note about DMG, what they're doing with these machines, they're going to use them at the standard efficiency rate. So these machines can be ramped up, but they've chosen to use them at the standard rate, and that will give them an extra 0.86 exahash at 19 joules per terahash. And so that means they get a smoother transition for the mining environment that those machines will be placed in, and better to manage. So there's a number of good updates there from what mining companies are doing it. Literally all the miners have been doing this. I've not named every miner. I mean, I can't name all 32, but I've named a selection of miners who've been making significant strides to get their efficiency down in readiness for that halving date this month.
Yeah, I'm glad you brought up some of the smaller ones as well, Anthony. We know DMG is also working on some immersion technology in their location in BC here. And a number of these smaller miners, we've actually seen SATO topping the charts with some of the efficiency metrics lately too. So a lot of companies, really every company in the space has this focal point, and we're actually already starting to hear some CEOs talking about the 2028 halving and preparing for that as well. So you've got low cost energy, you've got fleet efficiency. I will bring up, Anthony, the price of Bitcoin is obviously a big impact here on the halving as well. And the further the price drops, arguably, I guess, the more machines will become inefficient or not viable financially post-halving. And we're going to see network difficulty drop off to a bigger degree the lower the price of Bitcoin is. Is that accurate, Anthony?
I would say that's accurate. Mining companies will be able to assess at the levels when the Bitcoin when the halving occurs, the costs, obviously stay the same, but the rewards are, significantly less. And, if you're using less efficient mining machines, or your energy prices are a little bit higher than your competitors, you're going to have to make some serious decisions as to mine. And, we revert back to the Cantor Fitzgerald article that came out a few months ago to say that, if the Bitcoin price was at 40,000, there was literally only a couple of miners who could actually stay mining. The Bitcoin price, fortunately, is over 60,000 at the moment, which means, pretty much all the mining companies that we cover on the channel will be able to carry on. But, we've seen the price drop from, I think, 69,000 yesterday down into 64,000 today. So we've seen like a big, 7% drop in the Bitcoin price. We don't know what the price is going to be tomorrow. So, it's cautionary times, but not overly caution times at the moment. And, to alleviate some of that Bitcoin pricing pressure, we've seen some of the mining companies start to diversify their revenue streams to help them as well. So we can touch on that, Bryce.
Yeah, I wanted to quickly touch on the diversified revenue streams and also the balance sheet preparations that we've seen a lot of these companies issuing ATMs or increasing their HODL, increasing their cash position. So why don't we round out with those, Anthony, talk about the impacts on halving, and then we can finish things up here.
Yeah, I mean, if we go back sort of 6-8 months ago, maybe a year ago, I mean, as soon as the Ethereum fork occurred back in September 22, we had a couple of miners who were significantly geared towards mining Ethereum at the time, and those were Hive Digital and Corp, as they're known now. And these two mining companies, then started to try and mine other crypto coins with their GPUs effectively, and not to any significant effect. It was bringing in revenues, but not significant revenues. And I think I've mentioned this on a podcast before. If you look at what Hive Digital were producing in terms of Ethereum revenues back in, say, August 22, it was probably 6 to 7 million in a month. And then the revenues post the fork, they were sort of achieving about 200,000 revenues a month. So that was a significant drop there in revenue. So those two miners started then to think about what could they repurpose these GPUs for. So they were the first two miners to start talking about high performance computing and start to look at how they can transition into that space. And Hive actually went out and purchased 5 data centers that were doing high performance computing. So they sort of realized this was probably a way for them to get straight into that market, produce, high performance computing for customers. And they signed on some significant customers. I think one was in the health industry, if I remember rightly. And so that generated, some nice revenues that aren't correlated to the price of Bitcoin. And then we started seeing updates from a load of other miners, SATO Technology, Soluna Holdings, TeraWulf, all started to sort of put updates out to say that they were moving into high performance computing. And then we have the likes of Bit Digital, who in October, so we're only talking about 6 months ago, they announced they were launching their Bit Digital AI services. And what they did was, at the same time of announcing they were moving into this site, they announced they had a customer, and that customer was prepared to pay 35 million annualized revenue. And they started to have their NVIDIA 100 GPU chips installed in their leased facility in Iceland. And it was literally sort of month after month, we were getting another update to say that the contract was increasing. So it went from 35 million to 50 million in January. And we've had Sam Tabar on the show literally a few weeks ago. That 50 million has now been doubled to 100 million.
And Anthony, I just wanted to point out $100 million contract on the AI HPC front. This is from a company that mined a total of about $44 million worth of Bitcoin last year. So just keep that in context, you guys.
And absolutely. So, for a mine of the size of Bit Digital, they're looking to grow their Bitcoin hash rate. That's not a business they've decided to move away from. Absolutely not. But what they've articulated and said quite well is the fact that, there's no guarantee with Bitcoin price. It's been great the last few weeks where we've seen the Bitcoin price rise. We've seen actually a rise over the last 15, 16 months from the end of, 2022 when it reached, $15,500 after the SFX issues that were arising at that point in time. But now, going into, this next halving, and no one's too clear on what the Bitcoin price will do. There's a lot of hope out there and expectation. But what HPC brings to the equation is actually, you're getting paid a contracted rate of revenue for, supplying a service. And that's what some of these miners have done. And we also articulated on the fact that IREN updated yesterday on what they were doing. And they also updated on the actual potential profitable revenues that would come through for them. They were quite significant. So, mining companies, not necessarily the big three, but certainly a lot of these what I say is the tier 2 miners and some of the smaller miners definitely moving into this space to deliver. And if you think about margins, although Sam wasn't able to give us an exact amount of the margins, he basically said if the Bitcoin price rose to $100,000, it would still be more profitable for them to use their HPC contract than the actual mining contract at that point in time.
Yeah, it's incredible stuff, this HPC. It's recurring revenue. It's non-correlated to Bitcoin. There's no halving, high margin. The only thing we've heard, Anthony, in terms of kind of a negative here is a lot of CapEx initially. Very expensive to build these data centers, to buy the chips, to maintain these facilities. They're spec built for each customer. Sam Tabar said they've been receiving exclusively inbound attention right now, no outbound sales and marketing. So you do have to build to spec for these clients. But with that being said, if you're able to get some of these long-term multi-year contracts, Anthony, definitely sounds very fruitful and a great example of what a lot of these miners have done to really prepare for the halving. Now, the last thing we've been hearing a lot about, obviously we covered the ATM news from CleanSpark on Friday. Companies are cashing up. They're getting their balance sheets in very healthy position for the uncertainty that's about to come. Anthony, what are we seeing from a balance sheet perspective?
Yeah, I mean, I've articulated this many times. The importance of having cash going through the halving can't be expressed enough, and for a number of reasons. When your revenues drop by 50%, you've still got to pay for the energy. You've still got to pay your staff at the end of the month. So you need cash to do that. And also, a lot of these miners now who've raised some significant sums of cash, and we look to the likes of, Marathon Digital and Riot Platforms, who've got effectively war chests full of cash and HODL to support, anything going through the halving, so they can still operate for the next 4 or 5 years, if the Bitcoin price didn't rise at all from where it is at the moment, because they have a significant amount of, of treasury. But also that treasury size, and other miners are joining that, starting to get, significant amounts of cash. IREN released yesterday, they have 300 million in cash. Bitfarms have, 123 million in their treasury. That's their Bitcoin and their cash together. We know the likes of Hut 8 Core have got over 9,000 Bitcoin. So even at today's price, you're talking 600, 700 million in their treasury. These are significant amounts. And this gives these miners, if the Bitcoin price stays as it is now or drops further, we've already highlighted the fact that, there'll be companies out there maybe who can't continue to mine and maybe looking to move out of the space. And then you have the ability for some of these large companies with large treasury positions to go in and make some opportunistic purchases. And we talked about, mining companies buying mining companies yesterday, and we really sort of like put an end to that one there, because, most of the mining companies that we deal with there would have to be a significant premium. We've talked about these mining companies that we highlight have got, things in place to get them through the halving. So I don't see any of the miners here, but there are mining companies out there that probably, will be sort of like, facing challenges. And those could be likes of Argo Blockchain, Greenwich, Mawson, for instance. Those 3 mining companies there are smaller miners with, with debt on the balance sheet and with, probably less of a cash runway than some of the miners that we've talked about in this podcast already. But, a lot of these miners have got this, this treasury position that will help them get through the halving. That will give them opportunities to go out there and make some strategic purchases, to, to even, reinforce the mining machines as they need to replace less efficient machines and get their efficiency continuing to come down. And then we've looked at that you've talked about the strength of the balance sheet. I mean, we had Asher was discussing what they're doing from other costs, and they're really trying to drive forward a culture in the company where people aren't flying business class or first class. They're using economy. They have a limit on what that employees can pay for hotels when they have to go on business trips. And from my perspective as a chartered management accountant, that's music to my ears, because it's all about keeping the costs low, and these mining companies will have to start considering about all their cash costs going forward. So strengthening the balance sheet's been really important. We've seen a lot happening that way. A lot of cash reserves out there at the moment. We've also seen the likes of a number of miners saving their Bitcoin and hodling it and growing their Bitcoin. So we had a CleanSpark update yesterday. They only sold just over 3 Bitcoin from their whole production, and I believe that's down to that goes as part of compensation for directors' remuneration. So they've actually literally, from a company perspective, they're not selling any Bitcoin to pay for any operational capital costs. They're using the ATM that they've got in place, and they've had in place over the last 15, 16 months to do that type of work there. But they believe from their perspective that the Bitcoin price will rise. We also have the equal argument, an opposite argument, that people selling on a daily basis have the benefit of getting that price then. And as the Bitcoin price has come down a percentage since yesterday, if it keeps going down, then obviously those miners that sell on a daily basis are going to benefit from that too.
Anthony, I'll say one thing for sure. Although the halving is only a couple days away or a couple weeks away now, these companies really have been thinking about it for years and years, and there's no lack of preparation on their part. So as you said, we don't expect any of the companies that we cover on a regular basis to have any material changes in their business operation through halving, but there may be some great opportunities for these companies over the next couple weeks and months. So there you have it, you guys. A lot going on in the space this month, this week, and of course this day with the price of Bitcoin. So let us know your thoughts in the comment section below. Which of these companies is going to make it, and what do you expect from the halving, post-halving in this mining sector or mining industry? Now, Anthony, if people are still watching the video, make sure they hit the like button. Feel free to subscribe. We just crossed 43,000 subscribers, which is phenomenal. I'll give it back to you for any closing thoughts, but a great summary today and great discussion.
Yeah, I think we've covered the sort of major 4 or 5 parts that mining companies will do. We didn't get a chance to cover in any detail about hedging, but I know, and we spoke to the likes of Sam Tabar, who sort of have, they're doing things with their Ethereum hodl at the moment, and other mining companies will be looking at sort of like doing some hedging. I know Argo Blockchain are in that position there, and maybe Marathon Digital have done something with their stack. I mean, these companies have got large amounts of Bitcoin, but hedging against the price of energy, hedging against the hash rate as well, are opportunities for these mining companies. And there are companies out there that are experienced in these areas that are now helping some of the mining companies. So that was a sort of like a 5th or 6th point that we could have included in this podcast.
Yeah, there's many factors out there, and unfortunately, guys, we didn't have time today to go through all of them, but that's another comment, Anthony, we'd love to see below. Is there any other key factors here that you guys are monitoring, or metrics that maybe we should take a look at in a future podcast as well? So guys, thanks so much for watching. We appreciate your time. Halving's coming up, and Anthony, we'll see you here tomorrow to talk more about it.